Last time, I talked about being bullish. Boy, did I surprise a lot of people. Things haven't changed, but now I'm gonna go a little bit deeper, talk about when to buy, when to sell, and when to trim as it relates to the markets. So sit back, grab that cup of coffee, let's go. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First time here, we are a practicing financial advisory firm. What does that mean? What you hear here, we actually do apply to our models and portfolios. So if you're looking for a different opinion, that of Wall Street and Big TV, please do consider subscribing. So, talked about being bullish. Definitely surprised some people last time. So now we want to talk about a little bit deeper about strategizing as we go through this market, because you don't make money until you sell and or trim, right? So I want to talk about that a little bit and also get away from the idea of the crowded trade. So today we're going to go through, of course, our signals, the charts, sector spotlight, little bit of what keeps me up at night, because believe me, there's still some there, and game plan going forward. Let's go to the big charts. All right, first up, if this is your first time here, a big part of our process is the cycles. In the last video, we talked about moving to cycle 2, which is a growth cycle. We see that with GDP. Anticipate this for the next couple quarters. Inflation accelerates without a doubt, despite what the Fed says. We'll discuss that. The Fed is hawkish. Now, we know about the stimulus plan, possibly today. Okay, we're going to see a new one, but also we know that the new administration is going to be big time hawkish, which means they're going to be printing. So from there, when I get the cycles, I go to the charts. So if you like this process, you can click below for some information or schedule your complimentary appointment. All right, so first up, the signals. Obviously, if I'm bullish, we are going to be positive. Now, if you look at the monthly, what do I see? Just a little bit up there. It is difficult to see, but the fact is, we are finally just above that trend line. And then also, you look down here, that's momentum. I mean, that is a straight shot up. Obviously, the long-term view right now is, in fact, positive. Weekly, what do we see? Here's our trend line from 18. All right, that is a big-time breakout. Went above, held it. Last week was and again, we're holding it again. We are getting a little bit pricey on the long term. We are positive on momentum. So, of course, when I look at this chart, there's no question the midterm view is equally positive. All right. Now, short term, it gets a little sloppy. All right. We utilize this to make entries and exits into some of our sectors, et cetera. And we'll discuss that today. So, what do I see right now? Obviously, right here's your all-time high back in September. And then we started going higher here. All right. What happens, though, not unexpected, when you get that high, the market tires, right? You don't see the volume. This behind is momentum, okay? Momentum, and you can see going down there, is to the downside. So it's not surprising that we're taking a breather here in the short term, all right? It does not change my long-term perspective. So we're looking for a little choppiness, but still to the upside. The other thing is the volatility index. I always talk about this. Hit the top end of our range, which was 25. We are at 23 right now. 25 to 20 is a good place to be investing. Below 20 is Goldilocks, okay? We are definitely going to see that. So obviously everything is positive right now in a signal. So from there, let's take a look at some of the other items from last time. All right, now I'm going to hit a quick refresh because we are live here on Wednesday. So what's happening? I talked about gold last time. We have sold out of gold, okay? The simple reason is when you look at it, it's pretty easy, right? You hit a high, lower high, lower high, lower high. So having a little bit of a counter trend bounce on this, not at all concerned. I still don't like gold going forward. Same thing with utilities. What has happened, right? You see pretty much a straight down, a little bit of a counter trend there. But watch, this is cycle 3 assets, watch the treasuries, right? We're at the top end. Treasuries are down today. We still do not like those sectors, okay? Now, as I said, what you see here, we apply. Not every trade is successful, right? It's impossible to do that. Here's natural gas. You see when I bought it. You see when I sold it. That's high, that's low. That's not what you want to do. Now, as a cycle 2 assets, when the US dollar goes down, inflation goes up, you would like natural gas, oil, which I'll talk about in a second, and I bought a small position here. I will generally start with 2% and build once I get that trend going in the right direction. But the reality is, despite being cycle 2 and inflation up, we've had a warm fall and winter. So you look at what's happened to natural gas. I got out. It kept going down. In fact, the day after it went down about 9%. So sometimes you got to cut your losses and move on. And that's exactly what I did here with natural gas and went somewhere else. And I'm going to talk about that. All right, so that kind of shows you some of the sales we've had, whether it be because of the sector or just haven't worked out. Now, let's go to Sector Spotlight. All right, so once again, we're talking about the cycles. When you look at cycle 3, now cycle 2, the dollar continues to crash, and that is a true term. In fact, this morning on the dollar, we've hit a cycle low on the dollar, and if you get the dollar right, you get a lot of other things right. So one of our biggest holdings is oil. You can see that. Again, you can do this different ways. We've got the companies, we've got the price of oil, and we also have master limited partnerships. So there's a lot of different ways to work with oil. The big thing is oil volatility. You can see at one point it was at 300. Remember that at the beginning of the year when oil went to 0? We're down to 40. Not unusual to be that high, so it continues to be a great sector. So let's talk about also when the dollar's down, okay, emerging markets do very well. I've been talking about this for quite some time. So let's go back to the gardening concept. Here's China, right? Have had a really good run with China. We hit some highs here. I didn't like the momentum. I went from a full position of 6 down to 4. Okay, you can say I was fortunate. All right, I still like China long term, but it was getting overbought. Volume was going down. It seemed to have a little bit of exhaustion. Okay, so we pruned there, and then we went to Indonesia, okay? And we took to 2%. Actually, we went to a 3% position here. And we look at this. I've got some upside. You see my bought date. I still have upside, okay? And today, now this is an index. It's a little bit different. Today, it's actually up nicely. So that's how you move things around. That's why our clients have been seeing more trades this year. Now, again, as I've said, in this environment, there's so many opportunities in emerging markets. You might just be easier to buy the overall emerging market index. I personally am going in and out of some of the individual countries because it's a better way to grab alpha, which is return, okay? Next up, financials, banks, right? Or anything financial, really. Like this in cycle 2, have been dabbling a little bit with some individual names, maybe adding the sector, again, in a couple portfolios. Have not added it to our model yet because I don't really have a lot of room right now, but do like financials. I think that that is a good opportunity as we go forward. A lot of talk about small caps. I said this last time. I missed it, okay? Now, I missed it because I was elsewhere, emerging markets and some other places, so it's not like we missed the return. We just didn't get an entry point. My concern with small caps, Russell 2000, etc., right? You're up here, you're a little bit overbought. Right here, this red line right here is your 200-day moving average, okay? Between the 200-day moving average and yesterday's close, that is a 30% difference. The biggest spread in the history of small caps. This sector's way overbought. There's a lot of zombie companies there. I missed it. I'm okay to miss it. I'm going to wait for an entry and be patient here. Now, what I talk about here, I apply to individual equities, Got a little help from compliance. Let's go there next. Talk about 3 of our picks. All right, talking about individual stocks, compliance will allow me. I just can't show the name, which is why it's grayed out, okay? But this really shows you kind of our philosophy, right? I want you to think about planting, right? If you're gardening, pruning and replanting, okay? And that's exactly what we're trying to do here in order to lock in some of those gains. Now, this particular one I've owned for a while for some individual clients, but as I mentioned last video, in early October, I started adding individual equities into our portfolios. And you can see where I buy, really had a great run, okay? Trimmed some, all right? Now, I come from the William O'Neill. I'll have a book below. I'll have Andrew put this on the screen, but this is kind of the basis, right? You buy a 2% position of your overall capital, and you trim as you get above 20, 25%. And that's exactly what we did, and guess what? It kept going, all right? I mean, this has been a great trade. So let's talk about one that's gone up and paused. So this one I trimmed. I'm still going to hold. I might just take the profit here because it's significant, meaning in the 40s right now. We'll see. So let's look at the next stock. All right, next stock, again, grayed out, but let me show you the strategy here. Beat up big time, all right? Now, what do I see? Kind of see a bunch of ugly stuff down here, but then finally, there's a high, higher high, right? And we're starting to go up. So the trend definitely started to change. Volume was starting to go up. So I look for price, volume, and volatility, right? Now, in this particular case, when I see it, the other thing is that's what's called a golden cross. Your 50-day goes above the 200-day moving average. But most importantly, you see where I bought, have had a nice run. This is 20-some%, and then it stopped. So what does that mean? It's just not uncommon. In this particular stock, I haven't sold because of the upside potential. The other one was already at all-time highs. So short term, right, I'm not surprised we're stopping right here because that's where it stopped last time. That's where it broke down. So I'm looking for the next leg up, and I've marked my chart 24% to here, 59% to there. So as of now, I like this. If we break above here, I might add to this one. So last one I want to talk about is a company we've owned, as you see, since 11/3. Hasn't done much. It's been stuck in this pattern. Quite frankly, I'm ready to sell. I think there's some other opportunities on my radar. I do buy on red days. That's important, not green days. So I'm going to see what happens. You see it going down. That's your 50-day moving average. We're still positive on this trade, but if it breaks the 50-day, it breaks trend, I'd rather move on. Next up, what keeps me up at night? Not a lot right now keeping me up, really just one specific item and the next one, but I am concerned, right? We've talked about the Treasury, Jay Powell. Quite frankly, he was the first non-academic, he was the first Republican to come in. Now, you're not supposed to be political in the role of Fed and Treasury, but Jana is coming out and she's talking about some of her missions, and one of hers is climate crisis, which has nothing to do with the overall economy and the objectives. So I think going forward, this came out last week, the roaring 2020s. Prepare your portfolio for boom. Hello. Now, we know they're going to print, and they're going to print big, okay? So what is my concern? Hasn't changed, right? Even though I'm bullish because of what's going on right now, you can't deny the facts, okay? Here's your S&P in black. All right, the red dot is 20 overvalued for PE, price earnings, right? 15 is blue, 10 is undervalued. So if you go back to the dot-com crisis, you can see the spread between overvalued, okay, pretty reasonable. How about in the real estate bubble, reasonable. How about right now? Okay, 20, overvalued. Where we closed yesterday to what the price should be at is a 40% difference to be overvalued. How about fair value, long-term 15, PE is 59% from here. So we are still grossly overbought, okay? This is what the Fed has done, right? Creating this wealth divide and pushing this market higher to levels and extremes that we've never seen. Here's an article from yesterday, all right? This is the most dramatic thing that's almost ever happened in the entire world history of finance, according to Warren Buffett's sidekick. That's Charlie Munger. We're just way overbought. So even though we're bullish, boy, it is frothy, frothy, frothy. Talked about this last time. It's so important to have a process. Observe, orient, decide, act. So what's next? Be patient, be smart. Like I said, opportunities, follow the dollar. Watch the Fed, what's going on. The inflation trade, right? Dollar down, inflation up. Inflation's exploding, folks. Fed doesn't see that. We do. We're taking advantage of that. Volatility index, above 25, we don't invest, we trim. Below 20 is Goldilocks. Stay in touch. Talk to us. I can have comments here. I can talk on Facebook. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.